Hello, future millionaires, and welcome back to the Get Rich Slow podcast. We are your hosts. I'm Adrian Shermer, and I've got Rob Delavan and Lance Johnson here. Hello, gentlemen.
Good afternoon.
Good morning.
And continuing our 8-part series, I can't believe we've made it to the end already with Sue Hort, our resident tax expert. Thank you so much, Sue.
You're welcome.
Always
Glad to
wonderful
be
to
here.
have her jazz hands with us.
Jazz hands, not quite zombie hands. Jazz hands.
They're working their way up. And Sue, why don't you tell us, I would love to hear from you, especially since it's last in this series for now. I know we're going to have you back again, but
Sure.
recent success story in your world.
Well, I think the success, and this is something we're going to talk about in today's podcast, is the joining of ROI Tax and ROI Financial to share our clients together. And I recently had a couple different clients that are have met with Lance and are getting started on the whole process. And they said, Sue, we're just getting to know Lance, but most of all, we trust you. And if you say he's the guy to go with, then we're going to go with him. And I really appreciate their trust in me, but then that's when I can turn around and share my trust in Lance and how hard he's going to work to help them increase their assets and plan for their future. So yeah, I think the partnership is quite a success.
Yeah. Well, that's powerful. I love that.
And I like to add something to that is just because clients have trust with Sue, it still means that I have to earn their trust. So I let them know up front that, you could have 20 years and Sue has earned that trust. It doesn't mean that I've yet to earn it. And so I think it's a dangerous thing for financial advisors or professionals to just assume I have trust. I think you should go at every new client putting your best foot forward, a fiduciary responsibility, giving them choices and options, and that's how you earn trust with that client. And so then I make Sue look like the genius that she is. Valedictorian, right?
My 15 minutes.
I love it. I love it. Awesome. Well, that's definitely going to be fun to build on in this conversation. So thank you both for sharing that. Upcoming events for us, we have under www.roi-fa.com/events. Everything coming up monthly and bi-monthly and so forth for clients, for the different referral partnerships that we have and the fun stuff. So that's all there. And then, of course, we have the ROI-fa.com website for all things ROI Financial. Delavan-realty.com is my own website for our real estate side to connect with us. We have directorsmortgage.com and search Adrian Shermer on that, and you'll get to all things Adrian with lending and so forth. And then last and certainly not least, Sue, www.roi-tax.com.
Yep.
There we go.
So in this episode, we are going to be speaking with Sue Hort, of course. She's with ROI Tax, and we're going to answer some questions in regards to why it's so important that your CPA and your financial advisor work hand in hand. And I know we've got an audience that spreads pretty wide. It's actually pretty fun. We've been picking people up all over the country. So for some folks, it's not going to be this group, but it is important that that level of communication is open. And we're going to talk about why it matters, why they should be partners in working towards your financial goals and your future. And once again, this is part 8 of 8. So after this, we're going to roll into a bit more of the real estate side, but this will help wrap us up on the tax end of things.
Right. And in the last episode, number 7, we did talk about the year-end tax planning process. And I think that covers us there.
Yep.
So, Sue, thank you again for being here. We're looking forward to this culmination. It's always fun. And let's start with question 1. So, the benefits of your CPA and financial advisor working hand in hand. I guarantee you we're going to get a little of Mr. Johnson here too.
I think so. So, well, let me tell from my perspective. I think the importance is that you've got two trained professionals that can help you on both sides of the coin. So you want to invest your assets and make the most of them, and you pick your financial advisor so that they can do that with you and help you stretch and reach those goals and dreams, as Lance always says. And if you're rolling along and making money, then you get to tax time and you have to pay a big bill. It shouldn't be a surprise. And I have people come in my office that are like, why am I paying so much? I said, well, you made a lot of capital gains. Look here, they sold stocks, and we don't want surprises. The financial advisor and the CPA working hand in hand can do what's best for the client, make them money and minimize taxes. And that's the big advantage to working together, is you're both on the same team for that client. And they want those two professionals, but they want them to work together for their best interest. And that's why it's so important. Lance, speak from your perspective.
Well, I like it as there's a checks and balance. So, I often describe what the financial advisor is trying to look at the present and really trying to move people forward in what I call an academic way. So we predict different assumptions, and with those assumptions, there's a future net worth, which the net worth to me is one of the best indicators, because it takes real estate, tax efficiency, rates of return, costs associated, inflows, outflows. The net worth year over year is one of the best indicators. So what we're trying to do is build assumptions that says, this is what it's going to look like based on these assumptions in the future. And the question is, are we measuring up on that? So now there's this double-edged side or double coin, which is, should we be more tax efficient now, or should we be more tax efficient in the future? It's kind of an age-old question, right? It's a chicken or the egg scenario. And so I think you have to kind of look at both of those things. And then, the past occurs. So Sue takes a look at the last year, and she's getting everything ready and saying, oh, by the way, you owe taxes, and they're surprised. So she often is looking at the current year and the past years and making sure that there's no police officer that's going to pull you over and put you in jail. And I'm looking at the present and the future and saying, God, these are the trade-offs of tax efficiency now in the future, not knowing what rates of return and tax changes and laws are going to be. And so because we come at it at a different point of view, it's awesome when we could be in front of the clients and say, here's some of the things that you, the client, we just want to educate you about being smart with your money. And so then therefore, here are the 2 points of view we're going to give you. You ultimately have to make the ultimate decision about your money. And I think having those two professionals kind of gives them the ease of mind. And I think that's where the hand in hand comes in.
So there was a article on money.usnews.com. If you search that up, we'll put it in the show notes, comments below. And it basically said that there's a natural fit, which is what you guys are talking about, understanding the flow of money, particularly in the retention of assets against, and they use the term excess taxation. So you guys both talked about that. That's kind of an interesting way to put it, like excess taxation. And it seems as if retention of assets is the financial side. Obviously, excess taxation, Sue, is where you come in. I haven't heard of the usage of the term that way.
I like that.
It almost connotes there's like a rolling you said, oh, okay, well, the financial advising side is looking at from one direction, tax is looking at the other. And you said, Lance, there's not one perfect way, but it's like they decide on a rolling scale. Oh, are they going to be, it's this wide. If for those of you watching the video, it's this big, you got to be somewhere in here versus here versus, so forth.
About a mustache length for those.
Yeah, mustache length. Right. There you go. I mean, is that accurate? Am I understanding that correctly?
I think excess taxation means, to me, I think if I look at someone's last year tax return, which is what I always do first with a new client, I look for where can I find them, places that we can reduce their taxes. And I think the excess taxation means there isn't just one way to attack a tax return. You put all the information in and then you say, okay, could I do a IRA? Could I do a SEP IRA? Could I various things? Are there more expenses that I could put in itemized deductions? What about my business? Is there something I'm leaving off? That's always the question that people have me. What else can I do? And so excess taxation would be if you just put in the information and never asked any questions or never sought for the best taxing, of it, which means, of course, the least amount of taxing. On the other hand, that's why you work with the financial advisor. Lance is all about Roth conversions, because if you do that now, you have your money earning, tax-free later, and it's after tax money. So sometimes if you have a year where taxes are low, you do more Roth conversions so that you're paying tax now. So maybe it's more now, but less later is the goal. So Lance, I'm sure you might have something to add to that.
I have, this is a great topic.
And
I have three areas. So real quickly, God, way back when Money Magazine was really, really popular, like super popular, when it first came out, they every year would do a little presentation right before tax time, and they would solicit 100 CPAs across the nation, and they give a tax scenario, and they would publish and you have to agree to this, you would do the tax return, and you would publish your results of what they owe or got a refund and how much you would charge for that tax return. And you would submit it. Then they would have 10 auditors from the IRS give the exact same to come up with what the IRS says the right tax return would be. Now, out of those 100, only 2 came within $1,500 of a quote unquote the right tax bill.
Wow.
And the rest of them ranged from $1,500 discrepancy to $50,000 difference. Wow. And what they charge. And I thought it was such a, I'm not sure I would want to, swing that bat. And so they did this for 5 years, and then there was a lot of complaints about it because they obviously damaged, Money Magazine would damage that person's reputation in public nationally.
Yeah,
that's one thing. So when you talk about excess taxation, there's a discrepancy amongst every professional about what your tax return would be and what the IRS. Okay, so that's one. Second, I look at it when Sue looks at, I have an opportunity to do an IRA contribution or a Roth IRA contribution. Which one do you do? Well, it depends on the taxes, the assets, and stuff like that. There's a decision that needs to be made, the age and who they are and whether they're aggressive with their investments. Are they gonna put it into a Google, or are they gonna put it into an AT&T stock? And that might dictate whether you do one or the other. So there's that. And then there's things like the Roth conversion. This gets back to this last. I think it's a tragedy that people don't do year-end tax planning before year-end. So it's hard to have a Roth conversion strategy if you have to do it in the calendar year
Yes.
and the 401k. So what happens with Sue, and I sit on these meetings, is she does a wonderful job of lowering taxes. But we have these conversations with some clients between April and August. Now they're behind in their taxes. We try to scramble to figure out the few things that they could be doing. And now we're 9 months into this year when
Right.
they can make changes. But if we did year-end taxes and you knew that bill, they would make more changes before year-end. Rob, we used you as example one year.
Yep.
And then we lowered your tax bill quite a bit.
Mhm.
And then the next year, we were starting in your planning in January so
Right.
that you had a full year of being able to deal with cash flow. We just end up making more changes quicker. So instead of taking 3 tax years to improve the client situation, we were able to take 2 tax years. And it's really only 14 months versus 30 months to accomplish
Right.
the goal.
Right.
So year-end tax planning, I just can't say enough about it, that it going hand in hand with Sue, the more we could do more year-end tax planning with tax clients, the happier they're going to be with her services. And to be frank, the less stressed they're going to be about their tax return because we already
Mhm.
determined it.
I love that.
Yeah.
Okay, so question number 2. This is a fun one. Can you tell us the story, Sue, of how ROI Tax and ROI Financial came together, and how is this going to benefit your clients immensely? And I'm sure there's going to be some comments from all parties involved here.
Be honest.
This will be fun.
Well, one day at our BNI meeting, the Business Network International that we
Mhm.
belong to, I was talking to Mr. Rob Delavan himself, and I was lamenting, how am I gonna, what is my exit strategy for retirement? There just aren't enough people becoming CPAs. I don't know who's gonna want to buy this firm. What am I gonna do? And
Mhm.
Mr. Rob Delavan said to me, Sue, you're a unicorn. There's only one of you. The way you do business is incredible.
Facts.
But I want to introduce you to someone who could really benefit from your tax firm, and you could benefit from his knowledge as well. And that's how I became introduced to Lance Johnson with ROI Financial. And we talked, and then we talked again, and it's taken us it took us a couple of years to get into a groove, and now we're in the same office and doing the clients, and yeah, it's all about that Lance had a vision, and I could fit in that vision, and it could benefit me, and it could benefit him, and it could benefit our clients. And so here we are. We took my firm, made it into a partnership with some professionals, Lance and Rob, and Drive Accounting. And now we're in the same place, and we're offering tax services, but then I'm able to share with my clients and offer them, to Lance for his services. And here we are.
And the rest is history. Now, I will say, Lance, didn't you and I, before we started all this, have a full heads of hair? See, here we go. Just get, yeah. As Adrian looks at
I
his
know,
too.
I think.
He's like, oh man.
Well, but I mean, in all honesty, though, financial advisors and CPAs, I think they think from different sides of the brain in some cases, and then our points of view are different. I often say that if we're working with a client, I'm sitting in the front seat looking at the road ahead, trying to help clients navigate potholes. And Sue's sitting in the back, making sure that the police officers, we're not going too fast and we're not taking too much risk with taxes, and keep us very compliant. And then we were sitting in the car discussing which direction we should go in, north, south, east, west, right? So that's how I describe it. It just so happens that in the past, we were in separate cars. Now we're in the same car with the client. And here's one thing I know about Sue and I. We care about clients. I mean, we do. I mean, there's a fiduciary responsibility to put our best foot forward. It's just always trying to help clients make better decisions about their money. Nobody else can make that decision but them. We could just encourage them to do certain things and make sure we steer clear from any potholes in the past or present, you know? So that's the issue. It takes a long time for a financial advisor and a CPA to get together. And the best thing we ever did was move into the same office because our businesses complement. When she's super busy, we have some excess time. And when I'm super busy, she has excess time. And so if we utilize our time efficiently with staff, 1 + 1 can actually equal 3 instead of 1.5.
Right.
And I think that's starting to happen.
The other thing that's incredible to that I've experienced, and we talked about this happening, but happening in reality has been so much higher level, is, you know, for example, you know, I'm running a real estate firm and a property management company and some other real estate stuff. The benefit to having to be able to say, hey, Sue, hey, Lance, this is the situation we're dealing with. And of course, you know, caveat, especially from a compliance standpoint, everyone's situation is completely uniquely different. I mean, literally it's uniquely as different as everybody has their own fingerprint. Everybody has their own financial questions and answers that are correct or not, or so forth. Myself, Adrian, on the lending side, I mean, we can have these conversations in real time. Adrian and I get in and out of that car, if you will.
Yeah.
And, you know, like, hey, I'm going to ride with you guys for a few miles during this.
Sue's been my parachute a few times for sure. I mean, it's just,
okay,
it's just
talk
real.
while I drive.
So now it's a plane, right? We just took off, but that's the concept. And that analogy, I mean, it could almost be seen as, you know, kind of hokey, like, hey, we're all in the car together. You know, it's a bunch of clowns in a Volkswagen, but there's something to be said for, hey, this lending scenario on this property versus this scenario, cash on this property. What's that look like, Lance? What's that look like, Sue? If we save the money over here and, God forbid, actually invest the difference instead of just say we're going to invest the difference, what does the projection look like with, you know, but when you actually start crunching the numbers? And I mean, the power of that is something that, I knew that it was going to happen. As it actually happens, it's so cool. It is so cool to be able to just, you know, have those resources at our fingertips for the benefit of our clients.
I think one scenario though is, you use a good analogy where everybody's situation is different, so they have a unique thumbprint or facial expression. Yet we all have 2 eyes, 1 nose, 1 mouth.
Right.
And what you realize is
1 wallet.
The concepts are all the same for everybody. Like, so Adrian, you and myself all have, and Sue all have some common scenarios. We want to minimize taxes now in the future. We want to, you know, have a good retirement. We're going to have investments. We'll have retirement plans. There's cash flow issues. There's paying down debt. There's utilizing business write-offs. That's the eyes, the nose, the face. Some of us have hairlines. Some of us don't. You know, that there's some uniqueness, but then there's a lot of similarities.
Right.
And I think it's helping clients gravitate to the same strategies. What do you do when the market's at the height of the market? There's a set of things you need to do. What do you do to take advantage of the market? What do you do on the bottom of the market? There's certain things you could do that take advantage of that market. The question is, do clients out there have a game plan? And that's the issue. Most of them don't have a game plan. That's like designing a house and building a house with no blueprints or plans.
Right.
Would you ever do that as a real estate agent?
No,
No,
never.
never. The answer is never.
Never.
No.
Never.
Why should anybody do financial planning without blueprints to their future?
Right.
They never should do that. And your house is only a small pittance to what your overall net worth is
Mhm.
over time. And so we're just trying to teach people the same concepts that you utilize every day in your real estate life.
Yep. Mm. So, last question. What do you see for the future of ROI tax and ROI financial and your clients?
Okay. So the sky is the limit, really. Because of the fact that now we're joined, now I have resources and we can hire some other CPAs and start to take off and maybe have other locations in other cities, hire CPAs to free me up to do some different things, and consult more with Lance's clients and vice versa. So I just see a lot of opportunity for growth and for our clients to be able to experience better synergy, to have the opportunity to minimize taxes, but increase their wealth at the same time. So very excited about the future.
There's a article coming out. I want to say it's April 2022 in Entrepreneur, Fortune, Bloomberg, I think Newsweek also, that talks about this, and national article. And I mean, it's an incredible opportunity to share, this concept. Lance, speak to that, because that was all about just forward thinking, this concept that we've been talking about this entire podcast.
Yeah, thanks. So this article is coming out, and I had a chance to talk about ROI financial, which everybody wants to, or talk about a concept that I don't know if I'll see it in my lifetime, but it's worth pursuing. But use the example of these big companies like Costco, one of my favorite companies to shop at. And it's just interesting because you can get a Kirkland brand, you can get Grey Goose, and it's similar, and you can get a high price and a low cost all in one stop. And they promote other businesses within their business. The question is, could we create that same scenario working with regulation to create the same one-stop shop in the financial world? Now, banks are trying to do it and insurance companies are trying to do it. But the concept is, could you do it over real estate, financial, and so forth? And I just think it's worth pursuing. It's just the idea is kind of cool. And where I see the collaboration going with ROI tax and financial, it's just one small cog that we'll build. And in the future, I think a happier ROI tax client that is not yet a financial client is they become a financial client and they do year-end tax planning. If 95% of Sue's old clients do year-end tax planning, you will have a happier client, a client that is informed on decisions in a timely fashion, not after the year, but during the year they're in. They'll have less surprises like, oh my God, I made $300,000. I have to pay more taxes? Well, of course you do. But in those years that you have high increase, maybe that's the time to buy a vehicle, a building, something, and then when your income's lower, you do Roth conversions. But if you're trying to make those decisions after the year, all you're doing is setting yourself up for disappointment. And so if we can get those clients to do more year-end tax planning, the clients are going to be happier and Sue's going to be happier, because I can tell you what we're going to plan for. Most of those clients will get a slight refund and they already know their tax bill. And the urgency of the tax, getting it done, Sue has to do her business in 12 weeks. That's huge. But if all of them are going to get a slight refund because we did all the work at the fourth quarter, things are a lot easier to do. It's not it's not being bottlenecked by the CPAs because we
Right.
already did the work and we spread the work over time. So you
Yeah.
have a happier client, a happier CPA, and they're probably more inclined to work with the financial advisor, which will help them build wealth by not paying as much in taxes.
Right.
I just see it as a win-win-win situation. And I hope any ROI tax client that hears this that is not doing year-end tax planning, please engage Sue in that service, and
Yeah.
you will have a happier client.
The one other piece here, Adrian, the clients that do year-end tax planning in the real-time tax planning of the future, right? Let's call them the future clients, although we're doing it today with a lot of them.
Yeah.
Adrian, what kind of borrower are they?
It's a slam dunk. I mean, a lot of times they have layered and complicated income situations, but it's twofold because we can get the documentation really easily. You know, we can go to one-stop source. There's a lot of times as I need new documents, the clients that are in the situation, we just have it uploaded through a portal. They don't even have to get their hands messy. And there's certain situations where they genuinely don't know what's going on. And I know that sounds bad on paper, but it's not. They're just, you know, they were so relaxed about the whole process. Well, speak to my CPA. I know it's dialed, or speak to my financial planner. It's all in there. They're much easier to qualify, really, because everything's in the right columns. And I've seen some pretty squirrely stuff. I mean, Sue, I've gone to you a few times and said, you know, is this right? Can you really do this? And it's like, well, you know, let's just hope they don't get audited. But we send them to the right place, and we just know that everything's really dialed in, and we just have less underwriting problems, less red flags. It's a lot simpler.
I think year-end tax planning, what it does is like, if you have small business owners, like that would be the first thing.
Yeah.
It forces the business owners to get their books in order by November, December. So
That's
there's
a
not
fact.
as much work in October, November. They get in, and so if they're looking for a house in November, December, you're going to want a profit and loss. And if they are forced to do year-end taxes, it's just going to force them to keep updates with their books. Half the battle that Sue and I deal with is small business owners, you know, less than $1 million of income that still are trying to keep their costs down, right, and grow the staff and the business. And so they'll try to do the books themselves or whatever. And we're always trying to get updated financials. By doing that ahead of time, the taxes, you're more likely to get their books in order so we can do the right tax planning, and it just makes it much simpler for you too. And so again, I go back to this: if we love our clients, if there was one thing I would encourage every client to do, year-end tax planning puts them in a better position in so many different ways. I just can't stress it enough. And that's what I hope the future of ROI tax and financial is. We do some of that work before year end instead of after year end.
Love it. So thank you so much for being here, Sue, and for adding so much value.
We're going to miss
listeners.
Adrian, I can come back.
There you go. Hey, you heard it here. She might come back. Adrian, take us home here.
Oh, wow. Impressive. www.roi-tax.com is where you can find information about Sue. I hope, though, that this, like all our episodes, this is universal information that we're offering. I know we've done a great deal of back rubbing here. We all love each other, but there's good reason, because we've fleshed out professionals that we respect within our field, and that's how they end up on this podcast. So don't think for a minute that this is, only applies to the group that you hear in front of your ears. We definitely want this to spread out, and for everyone anywhere to be able to glean some benefit. And hopefully, if you can't use us, you can find a team local to you that'll be able to achieve the same level of balance and just that teamwork. So final episode, 8 in an 8-part series. Next week we'll be moving you guys on to a bit more of some more real estate stuff, and look at what the market is doing right now. I know that the world is crazy. I feel like I say that every year, but it continues to evolve on a weekly basis. We've got our fingers on the pulse, and we want to spread that information to you from all sides of the industry: financial planning, real estate, and lending. And yeah, please share this episode, and please comment back. We've received tremendous amount of feedback. It's really helping guide what we produce for content for you guys next. We want to make sure that we get ahead of it, do the research, and provide you accurate information and great sources to draw information from.
Awesome. Thank you all for listening.
We'll catch you next time.
Bye.